Chinese regulators launching a cybersecurity review of ride-hailing company Didi, sending shares down 22%. Will there be further fallout to come? Let's bring in Ruchir Sharma, Chief Global Strategist at Stanley Investment Management. He's also author of the 10 Rules of Successful Nations. Ruchir, good to see you. Thanks so much for joining us. I guess my first question is a big picture one, the weekend's events in mind, but also the actions towards some of the mega cap tech companies in China in the last sort of 6 to 12 months as well. Is China moving meaningfully away from the sort of managed capitalism approach that it had for most of the last decade?
No, I don't think so, because I think we have to put this crackdown into some perspective here. And my feeling is this, which is that if you look at China's growth model over the last 30 to 40 years, the model that they really followed is that you have these waves of unbridled capitalism, so to speak, and then the state starts to get worried that this is all getting too much out of control, and the state then reasserts itself. It happened with the anti-corruption campaign a decade ago. Even during the times of reformers such as Zhu Rongji, we saw similar campaigns that take place. Now, to put this in context, what I'm talking about here is this, that the kind of wealth explosion that we have seen in China over the last couple of years is unprecedented. That China has today more than 600 billionaires. There are more than 50 billionaires in China with a net worth of more than $10 billion. Just how remarkable this is that 10 years ago, there were 0 billionaires in China with a net worth of more than 50 billion, more than 10 billion rather. And also the fact that China last year produced a new billionaire virtually every 36 hours. So it's this incredible wealth explosion that's taking place in China, and the state is trying to reassert itself as it has done in the past when you've seen such phases of literally unbridled capitalism.
Even if that proves to be the right move for them, Ruchir, in terms of wealth equality, what will it do to their top line growth, their GDP growth over the next decade versus the prior decade?
Yeah, so that's the big risk now, because in the past when China has carried out these crackdowns, there's always been some new growth engine that has surfaced and taken the Chinese economy forward. The big risk here is this, that over the last 5 years, the main driver of economic growth in China really has been its new economy, the technology-led economy. Its old economy has been too saddled by debt to do much. So the big risk is that if they overdo this, they could end up killing the golden goose, because the tech sector has really been its golden goose. That's where so much wealth creation, so much employment creation has taken place. So that's the big risk. But I hope it doesn't go that far. And therefore, I'm taking the historical perspective here that they've done these crackdowns in the past and they've stopped when they think that the economy is suffering too much of collateral damage. The risk, though, this time is that they're doing this and there is no alternative plan, so to speak, as to what will be the new growth engine if the tech economy does indeed slow down dramatically on the back of this. And we're seeing some signs of that already.
Ruchir, what happens then for other Chinese tech companies that are looking to IPO? As more and more of these crackdowns appear to be happening from the Chinese government or scrutiny, will they back down from looking at a dual listing in China and here in the United States, or a single listing in the United States as Didi did?
Yeah, that's possible. I don't know the specifics in terms of what may happen, but we're seeing some evidence of that. The data which has been quite startling is the number of new unicorns in China. That's dropped dramatically over the last few months. We were seeing Chinese unicorns rise as fast as American unicorns till even a year ago. But that data now shows that the Chinese unicorns have dropped dramatically. So I think that these are the risks that the government in China, I'm sure, is going to look into. But the only historical perspective I'll put here is that we have seen such crackdowns before. I think there's a lot of misunderstanding about how the Chinese economy functions. We think of it as state capitalism. I think of it more as unbridled capitalism that then requires state intervention because the state begins to fear that it's losing too much control on the economy. And that's the phase we currently are in.
Ruchir, pivoting a little bit, final question, just wondering which major economy outside of the US you think has scope to surprise to the upside in terms of GDP growth relative to expectations for the second half of this year?
Well, I think that, since we're speaking about China, I think that the new China really in East Asia is Vietnam. Vietnam is clearly emerging as the new China. It doesn't have the scale of China, but still it's a pretty good critical mass. So I'm quite optimistic on Southeast Asia in general and also in Vietnam in particular. And then we can speak about it on a separate segment. But I also feel that the commodity boom that we are seeing could finally help a lot of the beleaguered commodity economies of Latin America and Africa that are so dependent on commodities. But if you ask for a single country, yeah, I think that Vietnam is clearly emerging as the next China in the region.
Shepard Smith here. Thanks for watching CNBC on YouTube.